The topic of recession comes up a lot these days, and for good reason. After 2 consecutive quarters of negative GDP growth, it begs the question if we are in one right now. In today's video, we're going to look at all the data that has come in since my last recession update video at the end of August and assess where third quarter GDP is likely to come in. I'm going to give you the results up front in case you just want the headline growth number. But if you want to know how I got to those results, make sure to stick around to the end of the video. At this point, I do need to throw in my usual disclaimer around these kinds of results. This video is not financial advice, and while I am a professional economist, I am not your financial advisor, and you are responsible for your own financial decisions. Okay, with all that out of the way, here we go. Based on all the data that has come in so far, I'm estimating that third quarter GDP growth is going to come in at about 2.3%, a reversal of the negative 0.6% in the second quarter. But what is more important than the growth estimate itself is that it is projected to be positive growth. This means that even if we were in a technical recession because of the negative growth in the first half of 2022, we have now come out of that technical recession. If you just wanted those results and will be leaving now, please give this video a thumbs up if you found this information useful, and I hope you will consider subscribing if you want to get these kinds of economic updates each month. And make sure to hit that notification bell down below so you know right away when the next video comes out. I try to release an economic update video about once per month, so if you don't have the notification bell on, you might miss it when it comes out. If you want to see more of my content, check out my other channel, Real Estate Watch, where I focus on forward-looking real estate analysis and post videos there more frequently than I do here. For everyone else that wants to see the latest data, let's get into it. Consumer spending is the biggest component of U.S. gross domestic product, or GDP, making up about 70% of the total. It is also the only quarterly GDP component that we get direct monthly data on, which allows us to really get a good idea of where total GDP is heading, especially now when we already have 2 of the 3 months of the quarter to work with. Right now, real consumer spending is on pace to grow by 0.6% on an annualized basis for the third quarter. This number is both good and bad. It's good because it's a positive number. If it was negative, then the headline figure for overall GDP would likely be negative as well, given how consumer heavy our economy is. The bad part about it is that it is so low. A quarterly growth rate of 0.6% would be the lowest growth since the initial plummet at the beginning of the pandemic and is dangerously close to negative territory. It is hard to make the case that our economy is on strong footing right now when consumer spending is coming in so weak. There are several components of domestic investment that factor into total GDP, such as residential and non-residential structure investment, business equipment purchases, and intellectual property investment. But the one that we're watching really closely right now is the change in private inventories. This component was a big factor into why we saw negative GDP growth in the second quarter as businesses were trying to reduce their inventories after a big buildup in 2021. Right now, the monthly indicators for manufacturing, wholesale, and retail trade inventories after adjusting for inflation are showing the situation to be better than the previous quarter. This will be a critical contribution to overall GDP growth given that consumer spending is coming in so low right now. International trade is another component that can be a bit more volatile and move the top-level GDP number each quarter. It can be pretty dynamic as well. Exports, the goods and services we produce and send out to the world, has a positive contribution to GDP. Imports, the goods and services the rest of the world sends to us, is a negative contribution to GDP because we don't produce those goods and services we import. The monthly data we have so far on trade is looking very good for third quarter GDP. So far we have data for July and August, and exports are on track to increase by more than 10% over the second quarter, even after adjusting for inflation. Imports are on track to fall by around 5%. This is the perfect combination for a positive contribution to overall GDP. Exports on the rise, imports on the decline. The final major GDP category to look at is government spending. It's usually not a big wild card and is fairly predictable as long as the government doesn't start printing trillions of dollars and mailing out stimulus checks. Putting that to one side, the monthly indicators look like we'll see a slight negative contribution to GDP. Nothing too crazy though. The public sector overall added to payrolls in the third quarter, but the monthly Treasury statement shows federal outlays are down a bit from the previous quarter. So that's where things look like they're headed for third quarter GDP. My current projection is for 2.3% growth on an annualized basis. The government will be releasing their official numbers on Thursday, October 27th, so we'll see how my forecast compares at that time. I'm going to try to do this GDP update and forecast once a month, so if you don't want to miss it when it comes out, make sure you're subscribed and hit that notification bell down below. If you want to see some of my other content, make sure to check out the Real Estate Watch channel, where I post videos more frequently than I do here. If you're looking for forward-looking real estate analysis, that is definitely the channel you want to be subscribed to. If you like this video, please leave it a thumbs up to support the channel and help it grow. Thanks for stopping by, and I'll see you in the next video.